Hey, what's up? Today's episode we'll be looking at synthetic indices and as well as currencies, but just a few pairs. It will be a quick overview. So today's date is the 26th of February, and yeah, let's get to the video. So my name is Chris Hendricks. For those who don't know me yet, uh, I am the co-mentor with Manando, uh, holding our team down, never broke again. So today I'll be using the TradingView platform. So before we get into this platform, as you can see, I have a few pairs lined up. So today I'll be only looking at silver, which goes hand in hand with gold. So basically silver and gold. I'll be looking at euro, Canadian dollar, euro, Singapore dollar, as well as the euro against the US dollar. So all these things influence gold prices as well. So they should align and go hand in hand with each other. So the first pair that I want to look at is silver. Let's start off with the indices. Before I move forward with this, let me just quickly show you the trade that I took with silver. So let me just quickly share my screen with you guys. So this is silver. This is the trade that I took. As you can see, I had a sell position, quite a small one, because this was a late. I should have caught it around these areas. This was a good impulse to the downside, followed by a nice, quick 50-minute flag. So I missed this entry point, and it literally just went down again. So the second entry point was a bit risky, so I didn't want to risk my account, and I just used the smallest lot size and tried to see what would happen right after. So this is the setup. Basically, we had a sell setup with silver. So looking at silver right now, let me just open it and go to the charts, delete everything. So for a quick disclaimer, silver has been, probably gold as well, they both have been recovering, like for a buy. They've been buying in the small time frame. So with silver, we're just gonna kick it off in the 4-hour time frame. And the first thing that I'm gonna do, so I'm gonna get the highest point, lows. So as you can see, with the highest point, we have this sweet double top right here. And as you can see, the second leg, it had a huge reversal. So basically, it engulfed the previous candlestick, and it's quite significant. So you can really see this is engulfing the previous candlestick. So this is a selling confirmation that there's about to be a change of trend. So with that said, let me just maximize my screen. With that said, we can move on to the lowest low. So with these 2 points or levels drawn, we can predict that the market was going to go down because of this reversal confirmation right here. So once done with the 4-hour time frame, I can quickly go to the 1-hour time frame and have a look. So before I get to, let me just get a rectangle to draw out the zones that I'll be looking at. So right now we are focused on this part for silver or gold, just to show you that this goes hand in hand with gold. Let me just pick out the gold and show you guys that it's been selling as well. It had the double top as well, and yeah. So as you can see, this was gold. We had a huge sell-off. Same thing right here, the impulse, flag, impulse. So as you can see, the dynamics are the same. Now I'm back with the silver, so this is silver. The reason why I decided to do silver is because silver is it's easier to figure out these flags or structures. So I'm gonna move on from the 1 hour time frame to the 15-minute time frame to really look at the flag or pattern that we had right here. And as you can see, we had a huge, well, it's not that huge, but we had a significant rejection back to this resistance that it broke. So this was a false breakout. Let me just show you. This area right here was a false breakout because the price went back inside and it formed this sweet flag that I missed, unfortunately. But this was like so clear, right? So we could have had that, but clearly we missed it. So that was it literally took just one 50-minute candlestick to hit TP, which is insane. So but unfortunately I was late with that one. So where I caught the market was right here. This is where I caught it. This was me right here. So let me explain this setup. So it's basically the same thing with this one. Remember our concept, impulse, correction. It's the same concept: impulse, correction, impulse, correction, impulse. So we're just following that simple method. And as you can see with this one, we had a weird, it's not beautiful as this one, but we had a flag right here. And remember about these flags, they need to consist of like at least 2 touches, but then for a safer entry you need about 3 touches. And as you can see, if I change the type of chart into a line chart, you can see that we had let me just get the arrows. As you can see, we had this first touch, the second one, and the third one. So at the third one, that is where I took this trade, and just look at what happened. Oh, just hold on. And as you can see, we moved about close to 3%, which is very significant. I basically grew my account by 400% or so with a friend. So this is the setup with silver or gold as well. So right now, currently it is going sideways, which means this whole thing from this point to what the market was, it was an impulse, and right now the market is going sideways, which means we are in a correction. And what do you guys know about corrections? After a correction, it's followed by an impulse. So we need to observe this one, but as you can see, it's creating this huge correction. So probably gonna take few days, and so but the potential to the downside is quite significant. Let me just zoom out and show you guys, because the trade that I took, I quickly went out once it hit TP, and I didn't want to hold for that long because this trade could literally, hold on, it could literally get to around these areas, which is such a huge movement considering that this is like synthetic indices. So that was my trade with silver slash gold, both great synthetic indices. Not a lot of structures. As you can see, I did not force to draw something like this, and this, you can see that this was not necessary. All I did was get the zones and just try to see the structures or the flags of the entry points. So this was silver, and just the referencing back to my Google Drive account, you can see we had, right after the flag, the second entry it sold, and this is where I got out. So basically there was that, and the second pair is currency, which is euro, Canadian dollar, and as you can see we had a bearish structure which was quite significant. It was huge, because this was probably this was the 1 hour time frame. So as you can see, this took a while to form, and remember our rules. So basically the structure had to consist of like at least 2 touches on one end, or for safe entries, the third touch. So basically we had this first touch right here, with the weak rejection, another weak rejection, which is the second touch, and the third one right here. And about the third one, you can see how we had this nice structure on our way to the third touch, right? So this was like more confluence for us to confirm that no, this thing is really selling. So basically I executed this trade like right here, and it sold. So I'm gonna analyze it again for you. Let me just quickly erase everything. And so with this one, it's almost similar to our synthetic indices, right? Because as you can see, the first thing we did was draw this part, and as you can see, it's a double top, just like our gold and silver, and we do the bottom. So but then this is currency once again, so you obviously need to confirm with like bigger time frames and draw structures, but I am a bit advanced, so I'm just gonna focus on the smaller time frames and entry points, because these are not like swing trades. These are not trades that you hold for weeks. No, it's just maybe the most you could hold is probably a day or two. So those big structures in the daily and weekly time frames, they're not necessary. So basically this is what we have, this is what we're looking at, and the first thing that we need to do is figure out the structure. So I'm just gonna draw this. This is my support for the structure and my resistance for the structure. And as you can see, There's a nice 1, 2, 3. Let me just highlight it. Nice 1, 2, 3. And let us check how it got to the third point. So I'm gonna go to the 15-minute time frame so we could look at it properly. And as you can see, we had this nice ascending structure. And remember, all those concepts of impulses, corrections, they count. They still show relevance in small time frames. As you can see from this point right here, like this was an impulse correction, and as you can see, hold on, as you can see, that's what we have right now, impulse correction. So this correction was just a sweet spot for us. It confirmed everything, and as from that point I just sold, and ever since this has been selling. So I'm gonna jump back to 2-hour time frame and show you how it's been going. So it probably moved I'm sorry, that was the air freshener. So anyways, so it moved just above 1%, which is significant. And the reason why I picked this pair is because it just shows so much similarities between it and the synthetic indices, like the gold and silver, because the structure is similar. It's a double top going downwards. So basically that is that. And just to keep the contrast, you can see that it did not play with my stop loss or anything. It just, once it got to the top, it formed that flag and just sold. So that is euro against Canadian dollar, and now we're gonna look at euro Singapore, and it's basically the same thing, it's just slightly different. We have those top, second top, third top, and to the downside. So I'm pretty sure it's also a double top as well. So let's just have a look. And once again, it's the same thing. So if I just take it from the top, remember 4-hour time frame, and you can see we have a double top. That is a double top. No matter what you think it is, it's a double top. And that is our lowest low. So I caught this price when it was around these areas. So that was my support with the zone right here, right, and the resistance right there. So this one it sold to nearly our take profit, but this is the 90% rule. But the price doesn't always get to 90%, so it's always safer to put your take profits around 70%, 65%, just over 50%. So let me just see how much it moved in terms of this pattern. Same thing, just over 1%. And you can see my stop loss was not compromised in any way. It just turned because I used the third touch, right? Because it was first touch right here, second one, and basically these two could be the third touch. So it's just the same concept, and I had this trend with basically almost every pair, every euro pair. So I'm not gonna go back to my Google Drive to show the screenshot, but as you can see, it's the same thing. We have a dedicated double top and the price sold off, creating this huge impulse, and we had a correction. It's a bit of a mess, but it's the same thing. We had a huge correction right here, and the price sold off, as you can see, like that. And it's just a repetition of literally what happened previously. As you can see, we had a huge impulse, correction right here, and another impulse. And this was I took this trade last month. Last month around the 25th of Jan. So just under a month ago. Well, over a month ago, basically. So it reached take profit, and this one really hit the 90% rule and passed a bit, and then it just reversed. So that was our take profit, and all these euro pairs this week, they definitely influenced gold and silver. So I felt the need to show these currencies because they just went hand in hand with the gold. So that is it for today's episode. You guys were hosted by Chris Tangent.